Singapore has long been a hub of goods, capital, talent, and ideas for Southeast Asia and the rest of the world throughout its history. The strategic location of the regional trading hub attracted many to Singapore to conduct trade. Singapore's position as a global financial hub then opened the doors for the country. For many years, active funds were either subsidiaries of government-linked companies or backed by government funds. The Singaporean venture capital industry traces its beginnings to the Monetary Authority of Singapore, introducing a friendly regulatory environment for such investors. Through public co-investment schemes where private capital investments were matched by government contributions, Singapore's position as the region's innovation and entrepreneurship hub was strengthened. This came at a time when venture capital interest was also gaining interest in other markets in the region, especially Indonesia. Between 2015 and 2020, VC investment in Southeast Asia grew 5.2 times compared to the 1.4 times increase in the Sino-Indian region. Dominated by some notable investments into growth stage companies, including Gojek's $3 billion investment round led by Google, Visa, Meta, and Tencent. The capital inflows at this time extended to younger venture-backed companies. Ajaib, a fast-emerging, Indonesia-based fintech startup, received $150 million funding from DST Global in 2021 and reached $1 billion valuation. At the time, it had been in business for 2.5 years only. Amidst this, there were also several key risks to investing in startups in Southeast Asia. A combination of geopolitical risk, lack of legal protections for investors, and too much money chasing too few potential deals, all pose concerns for Southeast Asia's venture market. At the National Research Foundation, or NRF, a unit under the Prime Minister's office that developed many co-investment schemes that put Singapore on the map of global venture capital, a government scholar and Harvard alumnus, Tan Ying Lan, was head of projects. He was leading a 360 million Sing dollar fund of funds to invest in funds and co-invest in and directly seed early-stage companies in Singapore. In 2011, Ying Lan helped to organize a talk by the Prime Minister of Singapore at the offsite of Sequoia Capital. He met Don Valentine, the founder of Sequoia Capital, and his partner, Sir Michael Moritz. Ying Lan kept in touch and after completing his government bond in 2012, joined Sequoia Capital as the firm's first Southeast Asia hire. He played a pivotal role in bringing to Sequoia's attention several high-potential tech companies in the region, including Gojek, Tokopedia, Carousel, and Appier. After 5 years in Sequoia Capital, England launched his own firm, Insignia Ventures Partners. Insignia was founded in 2017 to focus on early-stage technology companies in Southeast Asia. Getting the interest of potential investors for Insignia's maiden fund was challenging. Many were skeptical of the return potential of a fund in a region without any proven significant exits or fund returners at the time. Out of the 100 investors across China and the US that he had approached, just over 30 made investments in the first fund, primarily founders and executives of billion-dollar companies. Insignia's first fund closed at $120 million. Ying Lan wore many hats in the early days of Insignia, such as sourcing investments, due diligence, working with founders, and back office functions. Realizing this was unsustainable, he began to build up Insignia's team. He recruited his in-house technology chief and partner, Riddy Lee, who was his college roommate at Carnegie Mellon and had engineering experience at Amazon. They assembled the Insignia team, including an investment team, an operations team, to manage Insignia's back office needs and support portfolio companies post-investment, as well as a technology team, the first of its kind in the region. This proactive and aggressive approach from day one landed Insignia several early investments into now market-leading tech companies in the region, including Southeast Asia used car marketplace, Caro, Indonesia digital retail investment platform, Ajay, mobile bank for rural Indonesia, Payfast, Indonesian money transfer platform, Flip, Indonesian digital logistics enabler for commerce, Shipper, Indonesian social commerce platform, Super, and Vietnamese digital wealth management platform, Finhe. This approach had to evolve with the early onset of the pandemic. Insignia increased their in-country footprint across major economic hubs in the region, hiring extensive on-the-ground teams in countries like Indonesia and Vietnam. As the team grew across markets, Insignia also began to institutionalize its operations, with sector-based work streams, internal promotions of junior hires, hiring of senior operators, sectoral decision-making power, in-house digital streamlining of operations, among other novelties for a venture capital firm at the time. As Insignia's team came together and the success of early investments in Shipper, Caro, and Super, among others, became apparent, Insignia returned to the market to raise additional funds, raising a special opportunities fund of $30 million in 2018, a second primary fund of $200 million in 2019, and an annex fund of $100 million in 2021. By the start of 2022, Insignia had 30 professionals and $450 million in assets under management between their two active main funds. Their investments now included more sectors and reflected the maturing digital economy in Southeast Asia. With early tickets into pioneering companies like e-commerce aggregator Rainforest, the Philippines' first digital bank, Tonic, Asia first digital mental health care platform, Intellect, and Southeast Asia open banking pioneer, Brancas. Apart from expanding its footprint and activity in the region, amidst the pandemic, Insignia also launched an education company, Insignia Ventures Academy, catering to the growing pool of professionals looking to invest in Southeast Asia startups or simply play a more involved role in the ecosystem. Insignia Ventures Academy launched its 12-week experiential venture capital accelerator program in May 2021, the first of its kind in Asia, bringing together professionals across backgrounds and countries to get a taste of venture capital in Southeast Asia and build their network and track record. The structure of the program was inspired by England's Saturday training sessions he used to hold with the investment team in the early days of Insignia, where the team would go through self-designed courses, case studies, and role plays. Insignia Ventures Academy's Venture Capital Accelerator is now on its fourth cohort, with more than 100 alumni, many of whom transition into venture investing or startups after the program. Amidst the global turmoil and uncertainty today, Southeast Asia remains a bright spark, with Singapore as a hub for capital, ideas, and talent, and fast-growing markets like Indonesia, Vietnam, and Philippines continue to see a rising middle class, with ASEAN GDP crossing 3.5 trillion US dollars in 2022 and a growing digital economy. Insignia saw a once-in-a-decade opportunity to capture outlier returns in Southeast Asia and raise its third venture fund totaling 516 million US dollars. It continued its focus on early-stage technology investments in Southeast Asia and comes as the firm celebrates 5 years of building great companies. As Yinglan has shared, I do see that it's the golden age of Southeast Asia for the next 10 years, even with the background of global inflation and cross-border tensions. And if you look at Southeast Asia, it's very vibrant, not only in technology, but in the whole business community, wealth creation, and capital formation. We have been visited by an exponential number of investors, family offices, entrepreneurs with new ideas, and executives from big tech companies looking to join the next big thing. It's orders of magnitude 3 to 4 times in the past 6 months compared to a year ago. So that's certainly a good trend. We want to remain quite nimble and flexible in our strategy. We don't want to invest in the flock. We want to invest in the best birds in the flock. And that's always been our philosophy.